On the program today, South Africa unemployment rises to a new high in the first quarter of 2021. ENI and BP in talks over oil and gas assets in Algeria. And Kenya's rising debt payments put Kenya at risk of debt default as debt servicing costs jump to $11 billion. It's the first day of the month in June. Thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwagu. Let's get the show started with the market numbers. And here in Africa, it was mostly negative. Only the JSE index traded in the green at intraday. The index went up by 1.45%. The NGX index was marginally down 0.03%. Elsewhere, EGX 30 was down 0.61%. Kenya closed down 1.58% on Monday. And the story was different in the Middle East as we saw more greens. In the United Arab Emirates, Dubai gained the most at 1.42% and Abu Dhabi jumped 0.83%. Qatari index added 0.28%, while Saudi Arabia gained 0.81%. In Europe, markets moved higher this morning after closing out their fourth straight month of gains as investors digested a host of economic data. For more, here is Ashutosh. Hello, Ashutosh. Good afternoon. Good to see you again.
Hi, Jimmy. Thanks a lot for having me.
So this week is a busy one as far as economic data releases are concerned. Let's start with the Eurozone inflation. Any surprises there?
Oh, well, not much, but yes, it came in above expectations, and now it's exactly where the ECB has been trying so hard for so many years to get it at 2%, and now there are all chances of it actually breaching it in the coming months. There is inflationary price pressure building, but it's also going to fall sharply from that point, actually, and it is going to come below 2%, and perhaps even much below than 2%. And that's the reason why the ECB would not be too disturbed or perturbed as far as this data is concerned. It has been saying that the factors fueling the inflation have been rather transitory. If you look at today's data, it's been the energy inflation that has been a big factor. And we all know that energy prices had tanked last year, and now when you see in comparison, they look even much higher than what they are, and so their impact is much higher on the inflation. So that's one of the reasons. And then, like we discussed yesterday also, the economic recovery is not a given, especially when so many people have not yet been vaccinated. There are so many variants of the COVID-19 that are just floating here and there in different countries. So there are all these concerns and uncertainties around the recovery. So that's the reason why ECB has said that it is not really going to tighten the money taps anytime soon.
In the meantime, Eurozone factory activity has hit a new record high. How did that go down with the markets?
Well, the answer is right behind you. See, the DAX is at its record high, and that's because of the factory orders data, that's factory activity data, I'm sorry, and also the fact that the unemployment data came in really positive. So the markets are really excited. Think of it, all the data, the manufacturing PMI data is pointing towards a strong recovery going forward. The Eurozone saw a double-dip recession in the first quarter. Now the second quarter looks like it's going to be a growth. So Eurozone will be coming out of recession eventually in the second quarter, and that is actually the positive that the market is taking from this data, because there are also points of concern that perhaps the number could have been even better had it not been for some supply constraints. There have been supply issues that we've been talking about, supply chain disruptions, container shortages. All this is actually leading to greater input costs, and the manufacturers are now actually transferring that cost to the end consumers because there is demand right now, and so that they are able to do it, which also means that there is going to be high inflation going forward.
And German unemployment fell more than expected. Is the worst over for the German job market?
Well, the job market certainly seems to have turned a corner. And that's because there is a broad improvement. We've seen that the manufacturing sector has been holding up quite well. The factory activity has been at record levels for the past 3, 4, 5 months, thanks to demand from China and other Asian economies. But now it's the services sector which is joining the party, and that's after the reopening of cafes, restaurants, bars, shops, and that bodes well for the job market here, because services sector is a big employer, and it's good for German economy because the service sector does contribute around 70% of the GDP. So that's good. But having said that, the job market is not totally out of the woods. The unemployment rate continues to be higher than what it was prior to the pandemic. And we've also got to keep in mind that there are some 3 million people who are on short-time work. There are another some 3 million people who are underemployed. And perhaps some of these jobs may be lost permanently if the economic recovery falters in during the next few months.
All right, thank you very much, Ashutosh. Obviously, it's heavy there on data. We'll see what happens tomorrow. Enjoy the rest of the day.
Thank you.
And in the UK, manufacturing PMI jumped to 65.6 in May, up from 60.9 in April, and that's the highest since the survey began in 1992. The FTSE 100 index has jumped 1% this morning amid hopes of a strong recovery from the pandemic. But let's hear more from Juliana, my colleague in London. Hi, Juliana, good to see you. I hope you did enjoy your one-day holiday.
I enjoyed it, but it's great to be back with you, Chimaze.
Always happy to have you. Okay, strong manufacturing PMI, house price boom, and pounds at 3-year high against the dollar. Can you ramp up these data for us and how they are driving sentiment today after the bank holiday?
Absolutely, Chimaze. Come back bearing good gifts. Not only is the weather bright, but there's some strong data coming out of the UK, especially on the first day of the month. The FTSE is actually showing triple-digit figures, and that's thanks to those two key indicators you just mentioned, the PMI manufacturing data, the highest data for manufacturing on record. Of course, this has got lots to do with employment. Employability in this sector is booming, and because we are seeing a shortage of certain supplies across the world, the cost of these prices are going up, and we're seeing strong demand from the US, from the EU and China. This is boasting good PMI data. And housing, you know, if you're a landlord, this is a pretty good time, or if you're Chancellor Rishi Sunak, not so good if you haven't got enough money in your back pocket, because we are seeing the house price boom not waning here in the UK. In the past 12 months, it's risen by about £24,000 for an average home. That's the equivalent to about 10.9%. So if you're outside of the UK and you want to buy a home, it's going to cost you £242,832. Of course, Chimaze, I've said this several times on this programme, if you want to live in London, you can probably double that. You spend about £450,000 if you want to buy a home here in the UK. This has been cited for the race to space, lots of people reassessing their lives during the pandemic. Not only do they want a decent Zoom background of the bookcase, they also want pretty good gardens, especially because we've all been locked up. So that's one of the reasons fueling it. And of course, that tax break that was given by the Chancellor, extended by the Chancellor. So if you're buying a home up to £500,000, you don't have to pay stamp duty. So a lot of people are rushing to get that. So those two key pieces of data have really been reflected on the all-share. It's up 1.03%. At intraday, the FTSE 100 is up by 1.04%, and the FTSE 250 is up by 0.82%. In the currencies market, the British pound is down against the US dollar by 0.34%, down against the euro by 0.27%, and down against the Japanese yen by 0.22%.
Well, those house prices is obviously expensive for me. Anyway, the UK subprime lender Amigo is facing insolvency after the UK High Court rejected a controversial rescue plan last week. Amigo told the city this morning that it will not appeal the court's ruling. What's next for the lender?
Well, it depends, really. A lot of the headlines here in the UK are saying insolvency or bankruptcy, but I believe the bosses are still looking for another way out. And this is a long-running story, not just for Amigo, but for a lot of these payday lenders that have got themselves in a lot of trouble with the financial ombudsman here in the UK over the past couple of years, Wonga being the most serious of them. But Amigo, they definitely had, the market grip off these payday loans, but they stopped lending in November because they had a raft of old customers complaining that basically they were offered these loans when they couldn't really afford to pay them back. I believe their loan payback comes with an interest of about 49.9%. So they went to the High Court. They tried to say that anybody that was entitled to compensation, that they could only pay 10% of the compensation claim. The High Court have rejected this, saying that no, you actually need to pay back the customers the money that they're asking for. And they did say that they weren't going to appeal, but it may not be insolvency. I believe they are looking for a way out. Their share price was only down by about 7%, still a lot, but I believe the shareholders must think there's still life in the old dog yet if they haven't ran away at mass. So who knows? We'll have to wait and see what this update is later in the weeks.
And being your first trading day for the week out there in London, could you give us an insight to what's on the radar for investors for the rest of the week and, of course, for the new month?
Yeah, more PMI data expected. I believe we've got the services sector, the all-important sector, considering it contributes 80% to British GDP. That's due on Thursday. We're expected to see record-breaking numbers there, especially as we know non-essential retail and outdoor hospitality has been open. And then we've got construction data coming in on Friday. I believe we're also going to be looking at new car sales year on year. Of course, car showrooms have been closed for a long period of time, but we have been seeing record-breaking figures. We're expecting to see another record-breaking figure, I believe, on Friday. It's due. And then mortgage approvals nationwide have already shown that the boom is still going. So we're also expected to see that the Bank of England, under their watch, has been giving out lots of money for people to buy new homes. So yes, it's going to be a busy corporate data week for us, Chimmy.
Quite a busy one, and we have quite a lot to chew. In the meantime, enjoy the rest of the day.
Thank you.
Okay, shares in major Asian Pacific markets were mostly higher today as investors reacted to the release of a private survey on Chinese manufacturing activity in May. Mainland Chinese stocks closed higher, with the Shanghai Composite up 0.26% and the Shenzhen Component rising 0.25%. Hong Kong's Hang Seng Index rose about 0.9% as of its final hour of trading. The Kaizen Market Manufacturing Purchasing Managers Index for May came in at 52, higher than expectations for a reading of 51.9 by analysts. Japan's Nikkei 225 slipped 0.16%. The Topix Index edged 0.17% higher. Shares in Australia slipped, with S&P ASX 200 declining 0.27%. And U.S. stock futures traded higher early today after major indices saw gains in May. Futures tied to the Dow Jones Industrial Average implied an opening gain of about 180 points. S&P 500 futures and Nasdaq 100 futures also both traded in positive territory. The moves in overnight trading come after the blue chip Dow and the S&P 500 gained 1.93% and 0.55% in May to mark their fourth consecutive positive month. The S&P 500 closed Friday just 0.8% of its record high. While May's employment report set to be released on Friday will provide a key reading on the economy. According to Dow Jones, economies expect to see about 674,000 jobs created in May after the much fewer than expected 266,000 jobs added in April. And oil prices rose this morning, with Brent topping $70 as optimism grew over the fuel demand outlook during the summer driving season of the United States, the world's top oil consumer. Prices were also boosted after data from China showed that factory activity expanded at its fastest this year in May. We'll take a break, and when we come back, we'll do more on commodities market space. To stay with us. BP and ENI are in talks over the future of their oil and gas assets in Algeria as the two groups increase efforts to refocus their businesses to tackle falling margins, rising debt and climate pressures. Europe's top energy companies are cutting back their oil and gas portfolios to keep only the assets most likely to be profitable and redeploy capital for a transition to clean energy as uncertainty mounts over future demand for fossil fuel. Earlier this month, they announced they were in talks to forge a joint venture to run their combined operations in Angola. BP and ENI are in early stage talks for the Italian group to take over BP's assets in Algeria. The sides are exploring an outright sale as well as an option for BP to receive stakes in ENI assets around the world, possibly in its flagship liquefied natural gas development in Mozambique. And on commodities market update today, our focus is on tin as the price for the metal rises close to records for the first time in a decade. Tin's advance is one of the biggest moves in commodity markets that have ripped higher, feeding expectations among investors that inflation will accelerate, at least temporarily. To give us more insight into this is one of the research analysts with financial derivatives company, Lawrence Mercy. Thank you very much for joining us, Lawrence. Good afternoon.
Good afternoon. Thank you for having me.
Well, we've seen the price of tin increase by about 9.65% over the decade. What would you say is responsible for this volatility in prices over the period? And what could be the possible impact on the global tin value chain?
Well, first, to start with, it's very important to note that tin is a very significant component of information technology devices. It's used to make circuit boards in phones, laptops and other communication devices. So the reason for the volatility in its price is largely due to the COVID-19 pandemic effects, which caused an increase in remote work over the past year. So because of virtual learning, virtual works and virtual conferences, there's been an increase in demand for electronic devices such as phones and tablets and what else you have. This has spurred increased demand, whereas supply has not been able to meet demand as well. This is what has caused the price increase or price volatility over the past year. And another aspect to this is from the supply side. So there's been a drought in China over the past couple months that has affected water supply, considering that they use hydroelectric power, which has affected mines' ability to source for tin. And this has caused a global supply shock, as well as a volcanic eruption in the Democratic Republic of Congo, which has also caused a supply shock from their end. And all these factors rolled into one can explain the price volatility over the past year in tin.
Now, just as you noted, tin is a raw material for producing components, including conductors, mobile phone parts, and circuit boards for most information technology devices. Of course, you also talked about looking at global supply disruptions due to natural factors, including droughts and volcanic eruptions. So what would be the impact of this on the tin market, and are there any substitutes for tin?
Thank you for that question. Largely, we expect that with these global supply disruptions, there would obviously be an increase in the price of tin consequently, because it would not be able to meet the demand of manufacturers like the technology companies like the Dells, the Apples, and Microsoft, etc. Also, it could also force response from futures markets such as the London Metals Exchange. So to have a response or a reaction to these increased prices. So generally, there would be uncertainty in the global tin market if these supply disruptions were to continue. Now, in terms of substitutes, lead is actually a very similar element to tin. However, I wouldn't say that you can classify it as a good substitute for tin, because it's important to note that tin is a very good conductor of electricity, which is one of its core functions. It's also used as a plating element for for electricity, and also on windows, and also it's used as a solder, especially for wires and circuit boards. So lead is a similar element, but you cannot classify it as a substitute because tin also has a lot of unique capabilities that makes it stand out.
All right, let's bring it back home here in Nigeria. Tin is located, mined, and produced mainly in the Jos Plateau region of Nigeria. Current estimates state tin reserves in Nigeria to be about 300,000 tons. However, Nigeria's estimated production sits below 10,000 tons. So what is the cause of this low productivity environment, and does Nigeria stand to benefit from increasing its production capacity of this commodity?
The reason for this low productivity environment is largely due to a couple of factors. I'd like to start with one called the Dutch disease. The economy is quite centralized on oil production in terms of the extractive industries. However, we've seen the contribution to GDP of the mining and oil sector increase in Q1, but this is highly attributable to iron ore. It's not attributable to tin production. So there's been a neglect of that sector, if I would say, and a low investment climate in tin. The second reason would be the high fixed cost nature of this industry, because to mine tin, you need to incur significant fixed costs in equipment that would need to be imported. And we also have the exchange rate consideration to take into note. Another reason for the low productivity environment in tin is the safety concerns, because as we know, mining can have some health hazards as well. And these three factors account for the low productivity environment in tin. And to answer your second question, I'd like to say yes, Nigeria has a lot to benefit from tin, because aside the other uses to which you mentioned in the second point, tin is used to make tin foil. It's used to make solders as well. It's used as an anti-corrosive element for packaging. So the cans we see that package soft drinks, tomato paste, it's tin that is used to plate these cans so that they do not corrupt the food or consumables inside. So considering the supply disruptions globally, Nigeria does stand to increase its productive capacity to also stimulate job production and also to meet local demand here in Nigeria for FMCG industries and other manufacturing industries.
Thank you very much, Lawrence, for your time today on the program. We do appreciate it.
Thank you so much.
And South Africa's official unemployment rate has risen to a new high in the first quarter as the construction and trade industry shared jobs. The jobless rate rose to 32.6% from 32.5% in the 3 months through December. Statistics South Africa said in a report released today in the capital, Pretoria, that's the highest number on record. Unemployment, according to the expanded definition, which includes people who were available for work but not looking for a job, rose to 43.2% from 42.6% the previous quarter. That was as the number of discouraged work seekers surged by 201,000 people in the quarter. And Kenya may be heading towards a default unless the government of President Uhuru Kenyatta revamps its debt. This is according to the country's lawmakers. The East African nations' debt servicing costs are poised to surge to a record 1.17 trillion shillings in the year starting July 1. That exceeds the administration's 660 billion shillings proposed spending on development projects. And that's it on the program. Thank you for watching. I'm Chimeze Obi Iwagu.